Hello, good morning, ladies and gentlemen. My name is Ben. I'm the conference manager in Integer Research, and on behalf of all of myself and all of my colleagues, I'd like to wish you good morning and thank you very much for coming to the 10th Integer Emissions Summit in the US. For those of you who are familiar with the Integer events, you'll notice a few changes this year. First of all, we decided to split the Integer Emissions Summit and the AdBlue Forum into two separate events. So we actually had that recently in San Antonio, which was very successful. So what this allows us to do is have a more focused event today with more people in the room who are specific to the industry, and hopefully we can have some really good conversations off the back of that. Secondly, there's a few new features to the conference, which hopefully you can enjoy. So we have a technical session tomorrow, which will hopefully allow for more technically focused content, which is something people are always asking about and want to hear more from. And secondly, there's a roundtable discussion tomorrow. So at the end of day 2, we'll have a discussion that hopefully everybody can join in. We'll open it to everybody and just have a discussion in groups and talk about some of the key topics that have come up over the course of the event. So I do hope you can all stick around and join us for that. So before the conference starts, I just want to go through a few changes for the day. First of all, in this opening session, we're going to hear from Integer California ARB, and we were meant to hear from Charles Roberts at Southwest Research Institute, but unfortunately his flight was delayed yesterday and he's had a few difficulties getting here, so he won't be able to join us, unfortunately. But we have some great speakers in the first event, and we do have a lot of people focusing on technical low NOx work, so hopefully there'll be enough to make up for that. And Charles has kindly said that he would share some content on what Southwest are going to be, their current research, so you won't be left in the dark. So that's one of the major changes. The second is at the end of the day, you'll see on the program there's a panel discussion. After that, we'll be hearing from a presentation from KUS, who are sponsoring the dinner. So also you're able to stick around for dinner, that would also be fantastic. So apart from that, we'll be just keeping to the time and finishing this first session a little bit earlier and making sure we have enough time for lunch, which I'm sure everybody will appreciate. So there's 3 networking breaks today. There's the morning break, which will finish after this session. And then we will divide into 2 rooms. So as you can see in this room, it focuses more on the heavy duty low NOx. And in the other room, it'll be off-highway and natural gas. So that is the room if you come out around here. And so there'll be a discussion going on in there. So I encourage you, if you're interested in those topics, off-highway and natural gas, to go over there and join in that discussion. Also, while you're here, the sponsors stands outside. Make sure you're going to have a chat with them and see what they're discussing. And as I mentioned already, there's a lunch and a dinner today. The lunch will be provided by Lubrizol and the dinner by KUS. Something to just bring your attention to is people always ask, how can they access presentations after the event? This is how you do it. And this is also how you can contact anybody who you might not have missed it, who might not have been able to chat to at the event. So you can log in from the top right, and that's how you actually access the website. You should have been sent details to this from another of my colleagues, so you should be able to get onto this. And the delegate area is actually where you can get all speaker presentations if they've shared them. And so that's where you'll go if you want to get the presentations. And then you can also access online networking. So just before we start, I just have to read this out as a policy. It's an antitrust statement. Just to let you know, as a participant in any Integer conference, it's necessary to be extremely mindful of the constraints of antitrust laws. There should be no discussions or agreements of concerted actions that may restrain competition. This prohibition includes the exchange of information concerning individual prices, rates, coverage, market practices, claim settlement practices, or any other competitive aspect of an individual company's operation. Each participant is obliged to speak up immediately for the purpose of preventing these discussions falling outside these bounds. So with that over with, I want to open the first session of the day. It will be chaired by Tim Cheyne, the Director at Integer Research. Tim is the Director of Environment and Emissions at Integer. He's responsible for the company's work in the diesel emissions sector. He works closely with vehicle OEMs, engine manufacturers, tier suppliers, oil companies, and AdBlue suppliers. The emissions team at Integer covers Europe, the Americas, Asia, and we have offices in London, Detroit, and Taiwan. Tim has degrees in chemical engineering and economics. So I'd like to thank Tim, who will be starting off today's session.
Thank you, Ben. Good morning, everyone. How's everyone doing today? It's very good to be here, and I'd like to extend Ben's warm welcome to this 10th, thank you, to this 10th Integer Emissions Summit. We're very glad to be here in Pittsburgh. It's my first time to visit, and if it's yours, I hope you enjoy some of the sights and sounds. The city seems to be transforming. Interesting time to be here, I think, if you look at what's happening in terms of its evolution from an industrial base to some new technologies. And yes, Ben mentioned that this is a new format, a new model for this year for the conference. In the past, when you've joined us, you would have noticed probably the same number of people, again, from the fuel industry and the DEF industry who would have joined us and had very different interests. And we were finding that their interests were increasingly incompatible with what we wanted to be talking about at this event, which is really about technology and emissions control, powertrain. And so we've separated those off, and we had that event a few weeks ago in San Antonio. So the aim for us is really to focus this event on what you need, especially in terms of technology discussions, regulation discussions. And so Ali and the team will be talking to you during the course of the conference to get your feedback about what you'd like to see in future and how we should evolve the event to take care of your needs. Certainly there's lots to discuss and many challenges out there which we'll hear about. And we want this to be a good place where you can get together, meet customers, suppliers, partners, and explore some of the issues in more detail in a suitable place. So even the location is a good discussion to have. We're not sure whether to be here next year or in California, perhaps other places. So please speak to us about what you think this event should be doing in the future to meet your needs. I'm going to be giving the introduction today, setting the scene, kind of giving a perspective which hopefully you can build on during the course of the rest of the presentations and panel discussions and your own discussions with your colleagues. I've got two sections really. The first is to give a market update, like an update of what we think is happening in the truck industry in particular. And then secondly, to run through a few issues that I think are critical to where we're heading, and perhaps even raise more questions and answers. Just give you a few ideas about some things I've been thinking and some projects we've been involved in that throw up a few question marks particularly. And I'll have some audience participation then too, so we can see how we all feel about those things. Right, let's get going. So we work together with ACT Research based in Columbus, Indiana, and LMC globally for our truck data. We share information with them about things we hear, and we really value their insights on where the truck market's heading. So some of my information comes from those sources, but also some other sources too. And so I'm going to give you a perspective on where we think things are at in terms of the truck business in particular. So kicking off with last year, if you follow truck sales, you'll know that truck sales last year fell compared to the year before. More than 10% decline, mostly due to uncertainty in the economy. If you look at the key economic indicators like Purchasing Manager Index, GDP even, housing starts and other measures, there was some uncertainty there. So truck sales suffered. Also key trucking indicators, truck profitability and other measures were down. So the truck industry had a slump, I guess you call it, in 2016. What's happened year to date for this year, 2017, if you take the data up to September month, we're about the same level as the year before. So roughly the same number of vehicles sold across all those classes, about 330,000 trucks. But if you look at the data in more detail, this is the quarter-on-quarter development. You can see here, actually what we had was quite a steep decline in sales all the way back from the middle of 2015, where there was very strong sentiment in the truck market, which I'll talk about later. And a really weak quarter by the beginning of this year. And if you were taking that quarter then as any kind of predictor of the future, you would have been very pessimistic. But actually what's happened is the economy's picked up and the sentiment's much stronger, isn't it? Even if you follow the news, you can see also in the trucking metrics we follow that things have picked up and sales have followed. And so we've had quite a strong rebound compared to where we started, the third quarter up there at levels we saw in 2016. And so likely that the final year number will be stronger than last year if you take that trend to continue, which seems to be what most people think. The other thing that's good to see about this data is the share of the truck market. This has changed. If you've been in the truck industry for a long time, you've seen this evolve quite heavily. we're now at an interesting position where roughly, this is for US Class 8s, roughly 40, 30, 20, 10 between Daimler, PACCAR, Volvo, and Navistar. I guess the biggest shift there would be Navistar, which used to be up in the 20s in terms of market share, and has had difficulties, of course, with a few things, but one of them related to the emissions control strategy going back to 2010, and that's evolved quite far, and the question marks about where that goes next. But it's quite a different mix to what we would have seen 10 years ago, certainly, that 40, 30, 20, 10 market share mix. If you delve into the class 4 to 7, so the other half of the truck industry on the heavy side, less volatile, always tends to be less volatile in terms of sales, and we have seen that economics improvements registering those truck sales in the first 3 quarters of this year. As you see, Q2 and 3 this year, slightly stronger on truck sales. In terms of market share, the lighter end of heavy is much more fragmented than heavy, and you can see there Ford, Daimler, you need 3 or 4 players before you get up to the 2/3 market share. So in some ways, different kind of level of competition at the lighter end of heavy trucks. What about powertrain? Because we hear most of us have an interest in some way in emissions control, often linked to diesel engines in particular. So how does that shake out on the different classes? Well, this is data going back 7 years up to 2016 of the powertrains installed in those different classes of vehicles. And you can see at the heavy end, there's been a slight decline from 98% in 2010 to 95% in 2016, that being the diesel share of Class 8s. So diesel still very, almost completely dominant, really, at the heavy end. There's some natural gas engines in there in particular that account for the difference. When you go back to the lighter end, quite a different picture emerges. For example, at Class 4, we're down to about 21% in 2016 of diesel. That's down from about 40% in 2010. So there's been a shift mainly towards gasoline engines. And in between at the different weight ranges there, you see some level of intermediate diesel penetration. But certainly Class 7 to 8s, the hard-working semis and tractors doing most of the heavy lifting in road transport, there's a dominance of diesel. Where are those diesels supplied from, those diesel engines? These are companies that have a stake in that diesel engine supply system. And Cummins dominates this area of the business. You can see there more than a third of all diesel engines between Class 4 and 8 are supplied by Cummins. Certainly a strong position as the external engine supplier to the other truck manufacturers. If you take the heavy end, though, the Class 8s, 43% of 2016 trucks were installed in the US with Cummins engines. Back down to the light end, Class 4, much different picture. You've got Ford dominating in Class 4, 5, and 6, especially 5, on the diesel engine side. But bear in mind that diesel engines are a much smaller share of sales of Class 4 and 5 vehicles. So let's look at the future. What do we think about what's coming next? Well, one thing to say that is important is that the truck tonnage growth is much more stable. This is the underlying reason we have trucks. This is the ATA seasonally adjusted index for truck tonnage. You can see there that growth rate's much more stable than we see in the truck sales data. So there's different reasons for volatility in truck sales, but those aren't reflected necessarily in the detail of the demand for trucks. There was that collapse in demand for truck tonnage and truck transportation during the financial crisis, but since then there's been a fairly steady growth, and it's softened a bit near the end in the last 18 months roughly, but that trend is quite clear, you have to say. And forecasters who look at this data, ACT and others, don't see any reason for this trend to change. If anything, there's reason to think there could be an increase in truck demand, which I'll come to later in terms of things like ELD implications on trucks and a few other issues. So the truck demand numbers are quite solid, and there's no reason to think that that's going to be changing. So the underlying demand for trucks is good. But some data we watch, which is this spaghetti chart presented by ACT Research often, and it's a complicated chart, but I think it does illustrate some interesting points. This is a Steve Tams and the other guys at ACT's analysis of the correlation and the trend between carrier profitability. This is for Class 8s, and so let me explain this because it's worth taking some time on. Well, across the top we have carrier profitability, where the line down the middle is the point at which there, in most cases, there's room to invest. Profitability is good enough to allow for investments in new equipment in general, as a rule of thumb. The vertical graph, the y-axis, is the adjusted new used value gap. So this is the difference between the cost of buying a new truck and the resale value of that truck. So when the resale market's strong, you can get a good value for your second-hand truck and buy a new truck, and the gap is quite small. You don't have to spend more than $50,000 or $60,000. When either the new trucks are more expensive or used trucks the used truck market's very weak, you get less money for your used truck, and the investment for a new truck, the net investment becomes quite big. So when the truck business was very strong, or stronger, let's say in 2015 roughly, you can see we were in the good quadrant where profitability was good and the gap was quite small. Since then, the economy and the other factors I mentioned have meandered us down into the bottom left quadrant, which isn't the best quadrant to be in. That's where there's not enough profitability to justify investment, and the new used gap is quite big. So we're currently in this position here, which is partly explaining why we've had slow sales in the last 2 or 3 quarters. However, if you look at the underlying factors that drive profitability, then there's good reason to believe that we're going to be heading upwards, up and to the right towards the more buoyant section of this chart. There's many factors that point to that, but one thing is the new ELD regulations, which come in. I think phase 2 comes in next month. That's the electronic logging requirements, which are going to require much stricter implementation of driving hours for drivers. And different groups have done different analysis on what that means, but it's almost everyone agrees there's going to be a less flexible approach to the use of trucks and how drivers are driving those trucks. And depending on on the data you look at, it seems like about 3 to 8% of capacity is going to drop out the market, because they won't, either for the reasons of the drivers available or for the way the equipment's used, that equipment won't be able to be used as much, especially for higher trucks in that category. So there's a phase-in period. Phase 2 comes from the middle of December for 2 years till 2019, when there are various options available to drivers. They can either use the new regulation, the new technology, or they can use the grandfathered technology, which is being phased out. But certainly by 2019, when the phase 3 comes in, it seems that there will be some requirement for new equipment because of the increased vigilance for driving hours. And so that's one reason that ACT and others believe that the supply and demand for trucks will move more into a tighter position, and carrier profitability should improve. So let's get to the forecast. If we take the economic factors I've mentioned, some of those other trends that I've drawn out, this is our forecast for Class 8 and Class 4 to 7. What we see is, as I said, a relatively weak 2016 and 17. 2017 roughly at 2016 levels. If 2017 fourth quarter is quite strong, we could beat 2016 truck sales. But then we see an increasing trend. The degree of increase is debatable. Certainly, some commentators are looking at more than 10% growth in 2018 if the current trends continue. So we could have more like 240,000, 250,000 Class 8 sold in the US and Canada next year if things remain buoyant. The overall view, though, is that we're likely to see an increase until 2020 timeframe, which is the last year before Phase 2, greenhouse gas Phase 2. Remember, the first step of Phase 2 is 2021. So there might be, or this assumption is that there will be some measure of pre-buy, early buying of the end of Phase 1. That we then have some reduction in truck sales through to the next step of Phase 2, which kicks in 2024. So there might be some pre-buy there, and then so on. The degree of this pre-buy effect will depend on how disruptive the technology is, of course, and we'll talk about that during the course of this conference. If that technology is popular with customers, then and is really beneficial, then we'd see less of that pre-buy. But the uncertainty often does, we've seen in the past, promotes customers buying older technology early. On the lighter end, the class 4 to 7s, we see the economic situation improving, and therefore a relatively steady increase in truck sales without the potential disruption that you see on class 8s for the effects of greenhouse gas phase 2 because of the impact being smaller for those smaller categories. Right, so that's our view, and I'm going to unpack this a bit further in my second part of my presentation, which is looking really at the underlying issues, because that's the kind of traditional view. In my team we have economists and engineers looking at the future of the market, tracking trends, but the question is, are there things more dramatic happening right here in front of us and potentially going to disrupt the industry much more than we've seen in the past? I remember back when I was in my first job in the early 90s, those were the days of memos. You used to write a memo to your colleagues, and there used to be pigeonholes, and you used to communicate with people, even customers, through letters and memos. And I remember having a lunch one day with my family and telling my dad that there's this new thing called email that's been invented that's going to transform the way we work. And you just had that sense. I remember having that sense that everything is going to change. This is going to completely transform the work environments. And of course, it was dramatic. It did change many things. And sometimes you wonder whether we're currently in an environment where we're just on the cusp of that kind of change in terms of electric vehicles, autonomous driving, and other factors. So I wanted to do a quick poll. Now, some of you are not experts in these issues. I don't expect you to be. But let's have a quick exercise in seeing how you see the future on some of these uncertainties. In particular, I want to talk about two things before we get onto the regulation. The first is electrification and electric trucks. So let's say we're in 2017 now. You've got a view on how quickly electrification is going to happen, if at all. So I'm going to take us 10 years ahead, 2027, which is the last step of greenhouse gas phase 2, bear in mind. I want to ask you to raise your hand if you think that more than 20% of Class 8s will be full electric by 2027. So think about that for a minute. 20% of Class 8s, so not the dominant share, but a reasonable share of Class 8s will be full electric, kind of like Tesla's proposed, by 2027. If you think that's going to happen, raise your hand. Let's see how many people do. This might be turkeys voting for Christmas. So no one here believes that we'll have even 20% of Class 8s being fully electric. How about let's say Class 4 and 5, so local deliveries, beer trucks and that kind of thing. Who thinks that by 2027, 20% of Class 4s and 5s will be fully electric? Okay, that's interesting. I would guess that that's about half the audience. Great, very good. How about 2022? Just to bring this a bit closer to home. So who thinks that we'll have full electric trucks, Class 4 and 5s, 5 years from now, 2022, more than 20% of all vehicle sales in that year? Raise your hands. Okay, so no one thinks it's going to happen that quickly. Very interesting. Moving across to autonomous driving. You're all familiar with some of the testing going on with platooning and other technologies. I want to ask a similar question. Who thinks that 20% of Class 8s sold in 2027 will be fully autonomous? So they'll drive on their own without any supervision. Think about that for a second. 20% of Class 8s, so the heavy lifters taking around the nation's goods and moving on interstates, 20% by 2027, fully autonomous. Raise your hand. Okay, we have probably 5 or 6 people think that'll happen. How about the lighter end? Let's say Class 4 and city delivery. Anyone think that they'll be fully autonomous by 2027? Raise your hand. No. So the long haul is the easier case application, isn't it? That's certainly true. Great. Thank you for your insights. So I think the audience view, just to summarize, is electrification of Class 8 is a long way away. And so is full autonomy, but we might see full electrification on the lighter end by 2027, even maybe 2022. What do I think? Well, let's start again with the politics. And I just had a good discussion with Mike from Diesel Progress about how quickly this stuff could move. I think if you look at uncertainty, regardless of where your political stance lies, the uncertainty factor has gone up by an order of magnitude after the last elections. And I think I've only picked three players in the political frame, but just to make a point about, well, firstly, President Trump's position. I follow this from Europe, so I find it fascinating and quite scary, as I'm sure you do in some cases. I think it's quite unpredictable to know where President Trump lies in terms of the stuff we care about, so criteria pollutants and greenhouse gas emissions. But I do tend to think he's got other things to think about. So it doesn't seem to be his primary concern. He's much more concerned about his legislative agenda on other topics. So it doesn't seem like he's a major factor unless it becomes an agenda-topping issue, which hasn't yet done. The one thing that has happened, of course, is he appointed Scott Pruitt to administrator of the EPA quite early on in his tenure. Controversial appointment. Scott Pruitt was Attorney General of Oklahoma. I think more than 12 times he sued the EPA for different actions they took on the basis that they were exceeding their authority, things to do with mainly oil and gas industry. Stated climate change denier or human-related climate change. So it was a very pointed statement by appointing Scott Pruitt to that position. And certainly since he's been in the role, EPA and the governments have taken steps to roll back certain things, certain positions and certain regulation to some limited success, but really focused on the position on CO2 and climate change. And then finally, there's Mike Pence, who I only put there because I don't know too much about his position on the truck industry, but I just know he comes from Columbus, Indiana. He was the governor of the state. His brother is in the leadership team at Cummins, from what I understand. So I just note that there's a connection between the administration and the truck industry, quite a strong one through Mike Pence. I'm not sure how close he is to the whole political situation, but he is connected in some way, and he certainly knows Cummins from growing up in Columbus. What does that mean? Well, if you look back a few years, the justification for greenhouse gas phase 2 was basically this chart, which was the EPA's prediction of greenhouse gas emissions in a business as usual case with phase 1 and then a further phase 2 regulation. And the point that the EPA made was that to ensure a longer term acceptable position on at least some reduction on CO2, we needed to see further action taken, and that phase 2 red line is dropping after the implementation date in 2021, which was the target really. The aim was to reduce greenhouse gas emissions. I would hazard to guess that that's no longer the supporting argument from the new administration to support greenhouse gas phase 2, given their position on climate change. However, I think that there's many other business reasons to believe that there's a good basis to continue with phase 2, and the feedback I've had and the discussions I've had seem to support quite strongly that phase 2 will continue as already regulated and already published by the previous governments. I think the benefits in terms of customer experience is dramatic, and there's been quite recent data, including from the North American Truck Show, which happened a month or two ago. There was a test run there which showed more than 10 MPG performance on 7 tractors over 2 weeks, I think run during September. But the overall point is, if you look back to 2010, we probably had, I don't know, 6.5 to 7.5 MPG on average for a Class 8. We now probably, with 2017, we must be at somewhere near 9, if you look at the various data sources. So that performance improvement for customers is popular and must have some effects in terms of galvanizing support for further action. Also, if you look at the challenge that truck manufacturers have in the future, facing changes like the challenge from potentially someone like Tesla launching electric vehicles, the truck industry benefits from further improvements to the performance of trucks. I think if we head towards a coordinated effort towards 10 and above 10 MPG is only good for the truck industry in an environment where there's low oil prices. I think that there's a compelling case for trucks, diesel trucks as we currently know them, to have a long-term future if there's coordinated steps which all the industry benefit from. So it seems like the support is there from customers and from the truck industry to continue with phase 2 as planned. This is the phase 2 plan. You're aware of there's 3 steps in phase 2. as I mentioned earlier, 21, 24, and 27. So those currently, the consensus seems to be that that will continue, and we'll talk more about those plans during the course of the conference, I'm sure. The one thing that has happened is trailers. There's been an uncertainty about the trailer regulation, and EPA is going to revisit those on the basis of whether they've overstepped the authority for non-motorized equipment. But that doesn't affect too much I guess the audience here today in terms of technology for engines and powertrain and emissions control. The next question, the next uncertainty we're often asked about, and almost every time we get to talk with our contacts, this comes up, is electrification, of course. And I think there's two aspects to electrification of vehicles. The one is the public perception and the political view, and the other one is the reality. And of course, the first thing to say is there's nothing new about electric trucks or electric vehicles. Electric vehicles have been around for 100 years or longer than that. I remember growing up in the 70s, my milk was delivered in an electric milk van. And nothing fundamentally has changed really in terms of the nature of an electric vehicle. There's not been any breakthrough revolution. We haven't got as Mike said to me earlier in the break, there's no fusion in a truck. You know, if there was a leap in technology, we could see something dramatic change. But the issue really comes down to what it always has been, which is the weight of the battery, the cost of the battery. I think at the light end of all kinds of vehicles, we will see electrification quite quickly because investors are demanding that. Customers expect it. Even if it doesn't necessarily make entirely good sense, we're seeing support and growth for electric vehicles, certainly at the level of cars and SUVs and so on. But that battery cost is still the breakthrough point. This is a chart by Wood Mackenzie that we work with in metals and materials. And you can see that we're roughly at about, well, this was in 2016. Batteries currently cost about $250, probably more like $200 per kilowatt hour. Tesla claims, I think, $190 for the Gigaplex, the Gigafactory they're building. So it's still at that level. And most commentators think you need to have a $100 battery to make cars competitive without much subsidy. So this projection shows batteries getting to $100 by about 2025 on the strongest case. It could be a bit earlier, certainly with the level of interest and investment happening. But if that's for cars. Cars need about $100 to make the battery less than $10,000 and make the car competitive with conventional combustion engines. But if you look at trucks, of course, you get a new paradigm. Trucks need probably 800 kilowatt hour batteries, a Class 8 would, and that's going to require an investment of more than $100,000 certainly in the time frame we can see here looking 10 years ahead. So the weight and cost of that technology doesn't seem to me to be striking any short-term economic sense. And certainly the response from the audience earlier would seem to indicate you all think the same. I think we're all watching this closely, of course, because it would change things dramatically. But until the battery cost comes down quite substantially, and of course there's other issues like charging infrastructure, which would need to be very fast charging, so very high capacity electric lines being installed, which are quite expensive to do. There's also the issue of diesel tax, which doesn't go away. Diesel tax, when I check the numbers, is around 55 cents per gallon. If you take federal and state taxes, that's a substantial, with 60 billion gallons of diesel sold annually, that's a substantial, mostly to trucks, that's a substantial revenue source for states and the federal government. So that would have to be passed on in some way to electric vehicles, because electric vehicles couldn't have a free ride in terms of that tax. So we'd have to have a new system of probably distance-based electronic charging of vehicles based on mileage. So there's some issues left there too. So I think my conclusion, as no expert, but just someone who follows this closely because it affects things I care about, would be much the same as the group here. I think we have comfortably more than 10 years before we see electrification of commercial vehicles. I think we all know we'll see hybridization, we'll see some measure of electrification on almost every application because that makes sense. But beyond that, it's hard to see electric becoming the main mover of road freight. The third question we often get asked about is autonomous vehicles. And again, you, as the audience here today, you're quite skeptical about this. I thought you'd be more open to the idea this would come. I think we had 5 or 6 people thinking there could be fully autonomous Class 8s by 2027. There's a lot going on here, and my view would be that this might be where we get surprised. I think there could be more change happening here than we see on electrification, because there's not that physical science barrier to the change. The barrier here is more the legal framework, I guess, about how this gets practically implemented. And I've spoken to many of you actually in the past about how we move from where we are now and the legal framework we have now to a position where trucks become independent actors and have to be liable for accidents. And I think that might be the biggest barrier, because the technology itself is moving so quickly. Even here in Pittsburgh, there's developments going on with autonomous cars through Uber and others, the university here. And so I think this could be something that surprises us, but the regulation and the framework is going to be difficult, no doubt, in an environment where the government's not able to quickly enact regulation anyway. What is the implication, though, for diesel and the implication for diesel emissions control and the things you care about? I find it quite interesting that Warren Buffett invested in Pilot Flying J. I'm not sure if you noticed a month or two back, he took a big share in Pilot Flying J. This is someone who follows the infrastructure of the country very closely. He's been an investor in rail for a long time, hasn't he, Berkshire Hathaway? But investing in Pilot Flying J is a very specific investment in the future of diesel trucks, basically. And the decision to make that investment, I think, reflects certainly a view that I've seen mentioned by other commentators, that the future of trucking is only boosted by autonomous driving. I think that if all of you have seen those charts of the cost breakdown of the average Class 8 semi, and a big share of that's always the driver. Drivers are, this has the potential to be very disruptive to the driving truck drivers and the truck drivers' livelihood, of course. But if you remove a big share of that truck driver cost from road transport, you get to an economic basis which becomes very much more compelling, not only in terms of dollars per ton mile, but also in terms of the disruption. I've spoken to fleets before who used to have a team of salespeople selling their services to customers, who now have a team of driver recruiters. So their biggest challenge is recruiting drivers rather than recruiting customers. And in that environment, I think the encouragement or the draw for autonomous vehicles is going to be very strong. And you could see a situation where the economics of trucking changes so that it becomes much more competitive to move goods around, more flexible in terms of when those goods are moved. Even the intermodal shifts might change between truck and rail. And so the future there in terms of the diesel industry, diesel trucks, and what we care about, I think in a net effect is probably positive. But who knows? This is such an uncertain business. I guess that was my point about the earth moving underneath us. It's really hard to know where this is going to head to. We've synthesized all this together because we get asked to do these forecasts for different people looking at investments. And our view is that in a net effect, this is the forecast I showed earlier of class 4 to 8. That's the sum of those forecasts, truck sales going forward, roughly relatively stable, but some increase over the years depending on when the regulations come in. And we do see a small decline in the share of diesels as a share of the total sales, but not very much. So by 2027, given all the things I've told you today and our view and the considered assessments we've had from ACT and others, ACT Research and others, we think just over 20% by 2027 will not be diesel, will be other powertrains. But we think the role of diesel is quite entrenched and quite difficult to displace, especially in an environment where diesel remains quite cheap. I don't think it's going to become a lot more expensive given the global move towards saving fuel and saving CO2. So that's my final synthesis, my final conclusion of those factors. I don't see a huge disruption, but we are at one of those inflection points where I think the uncertainty behind a forecast like this is quite high. So all of us, I know, are following these trends very, very closely indeed, and we'll continue to watch them like hawks to see where they go. My time is up. Thank you very much for your attention. I have time for a few questions, so we have a microphone somewhere. I'll be glad to take your view or your comments. If you disagree with me, if you think something's going to happen sooner or later than I posited today, then please tell me what you think. Any questions or comments? Raise your hand and Ben will get you a microphone. Yes, one up at the front.
Tim Johnson with Corning.
Hi, Tim.
I'm surprised that you're predicting a pre-buy for Phase 2. We didn't see that in Phase 1. You yourself said that purchasers of trucks really like that high fuel economy. Is your pessimism, I guess, on implementation of Phase 2 related to the shift from the engine to the vehicle in greenhouse gas reductions? The engine only requires 4 or 5% over that whole phased-in period. Most of it is coming from the vehicle. So you anticipate that buyers are more pessimistic about vehicle technology?
Yes, well, yes. I think it's the uncertainty that comes from a wider regulation that could affect sentiment and affect how people decide to invest. I do think that's an open question, though. That forecast in particular is Act Research's assumption, and we've debated that with them too. I think especially the first phases of Phase 2 are not particularly stretching. I mean, they do take us a lot further than Phase 1, but they're not. I think the indications I've seemed to have heard is that we could meet that first step, particularly from existing technology. As you say, there's some vehicle changes, but I think depending on how the changes are explained to customers, how well they're published or reviewed in media, will depend on how well they're accepted. But yeah, it's an open question. I think you're right in the sense that there could be no pre-buy, certainly for the first step and even the second step. It's an uncertainty. I think that's one base case assumption. You know, it could happen that way. We didn't see it for Phase 1, as you said, so it's unclear. Yeah.
Thank you, John Coffey from GW Lisk. Question, a lot of research is on Class 8, and that's a market mover. But the retail markets are changing, and it could be somewhat disruptive where e-commerce is becoming more and more of an issue, where the total mileage per year truckload versus LTL or parcel, I think is going to make a difference and jumps from 8 to 6, 7. Are you seeing any research on that market move?
Yeah, I think that's a key point. The research I've seen is showing that there's a lot of inefficiency at the moment with the LTL and the smaller truckloads. You'll see unnecessary routes and journeys happening, and there's lots to be done to improve empty backhauls and utilization. So I think with technology we could see like an Uber effect happening on especially the mid-size urban transport. We could see assets handled differently in terms of how they move goods around, much more flexibly. And then I think you could see much higher utilization of vehicles, and that could potentially hit vehicle sales because the number of vehicles required could be less. There's a lot of disruption coming that could affect, I would say, that mid-range of truck. At the heavier end, there's already so much attention paid to efficiencies of usage of those vehicles, but no doubt there's more that could be done. So that's another revolution I think we could see in terms of the use of road transport, which would have an impact on the truck industry, absolutely. Driverless trucks would then offer opportunities there too. So I'm not sure if that answered your question. I do agree with the concept, with the potential change that issue could have on the truck industry, though quite dramatic. Yeah. Any final questions before we move on? Yes, down at the front.
Dan Kiefer from PACCAR. Tim, on the autonomous vehicle side of things, one of the points that you made was the economics start to play out if the labor cost drops. In other words, the driver's not in the vehicle. The Teamsters are very focused on that not happening in terms of always having a driver in the vehicle, and I think ETA in their recent position has stated that they feel the driver should always be with the vehicle. Moving very expensive loads around without someone there to protect the load also seems to be counter to market desires. How do you see those things influencing the drive then and the economics for autonomous vehicles, in particular on Class 8 side?
Yeah, I agree, Dan. I know that there's huge resistance to that kind of change because of the impact it would have on the industry, the disruption it would have. Also, as you say, who secures the load? At each end, there needs to be someone to unload and load and interact with the customer. There's lots of reasons to have a driver other than just driving the truck. So one model is that the driver becomes more of a freight manager, and you see proposals for models like that where the role of the driver becomes more, he's in his office in the truck and doing other things too. So that could be one outcome. But I suspect in the long term, not to be too controversial, but we saw a change from horse-drawn carts to combustion engines within, I don't know the numbers, probably, I saw a paper on this, less than 10 years. I think it had almost complete transformation because the technology was so compelling. And I wonder, there's a few steps between now and full autonomy, which are probably going to happen more easily. Platooning with one driver, for example, and other ways of seeing the first gains on autonomous driving, which might then be a pathway which is irreversible, and we land up somewhere that we wasn't particularly good for the driving industry, but almost unstoppable in terms of what it can offer. And also, there's so much entrepreneurship behind the owners of vehicles, and the competitive advantage of saving on driver costs is so huge. It would be difficult to compete without following the leader. So we've got a lot of debate and arguments and probably pain to come, I would say, before this happens. But it's in the long term, I can't see any other outcome. But how that happens and how quickly will be interesting to see. Yeah. Any final questions? No, in that case, thank you very much. And it's now my honor to move to the next presentation. We're very glad to have, well, first of all, to say, with the current cutbacks at the EPA, it's difficult for the EPA in general. And we did have I think it was Matt Spears before he left, or someone from EPA was joining us, as they always do at this event, but that wasn't possible this year due to budget constraints. But we're very